the show. The next section is a update from Will Shannon, who is the head of node operator mechanisms at Lido, and he's going to give you some insight in terms of what's happening with Lido over the next year and coming years.
Hey everyone, thanks Keen. So as Keen mentioned, we're going to be talking about a proposal that went live in September. This is related to the future of Lido Core. So Lido Core is what people have traditionally known as Lido. And this is important in the context of Lido v3, which is coming in this November, that will add support for ST vaults, which sit to the side of this. But I want to just start this off by basically checking into where Lido is today. This is a protocol that has 3 different modules: the curated module, which runs the majority of stake, the simple DVT module, and the community staking module. And these 3 modules have over 700 node operators utilizing the protocol to run validators. I think this is really, really important to recognize, because at the beginning of 2024 in January, there was only 37 node operators running validators via Lido. So there's been tremendous growth in the node operator set. And actually, like right now where things are heading, both the community staking and simple DVT modules combined are actually on track to surpass the largest permissionless staking protocol by stake amount this year. Within the curated module, there's best-in-class geographic, infrastructure, and client diversity. And with the adoption of dual governance, protocol governance has very much been hardened. So as we sit here on October 16th, I can very, very confidently say Lido is the most decentralized at-scale staking protocol. But with that context, I want to talk a bit about where the staking market is headed. So anyone that is in the industry could basically tell you things are more competitive than ever. While the Lido DAO has been investing in this decentralization, this massive node operator set expansion, the hardening of governance, market share has fallen by about 10 percentage points. And this is driven by many, many different reasons. We've seen a resurgence in centralized exchange staking. We've seen new novel mechanisms like restaking. But there's also been some other factors that are slightly more within the wheelhouse of Lido and direct control. And one of these things is, for example, fee compression. So large professional node operator fees have compressed in many cases to between 1% to 3% of staking rewards. In some cases, actually even lower than those numbers. And in many cases, these node operators are also bundling these with insurance. And in the past, node operators have generally lacked incentives to direct stake to Lido Core. That's because stake would be distributed across the various modules. They would be distributed across the different node operators. And so effectively, node operators have been competing at the BD level. So given this context of most node operator fees now being between 1% to 3%, it's important to reassess where fees are from the Lido perspective. Lido has a 10% staking fee. 5% of those in the curated module have traditionally gone to node operators. 5% of those have gone to the DAO. But that current structure doesn't reward decentralization efforts of node operators that spend much more resources in terms of having great infrastructure decentralization or using lots of clients. And it doesn't have any kind of recognition of ecosystem alignment. So there has been some changes that have already started to try and bring things more in line with where the market has gone. Lido Core already started to adjust fees with the second version of the community staking module, which just went live about a couple weeks ago at this point, where permissionless node operators in the module now receive a 3.5% reward share. And for node operators that are independent community stakers or identified community stakers as part of the ICS framework, after their first 16 validators, these node operators also now receive a 3.5% reward share. So with that said, we've made a proposal that would be going live for snapshots in November with potential implementation, if accepted, in December to reduce fees for node operators within the curated module. And the expectation is to do this across 3 different tiers initially. So the first would be the standard node operator tier. And this is where we would expect that the majority of node operators would fall into in terms of category. If we think about this across key ranges, and when we talk about the future updates coming in 2026, this will make a little bit more sense when we talk about fee curves. But for standard tier node operators, the first 1,000 keys would have a 5% fee for the node operator. This is to reflect the higher fixed costs that Lido professional node operators have to basically be ready to support thousands of validators worth of stake, to have on-call schedules, to be responsive when it comes to incidents. The next 2,000 keys would have a 3.75% range, and all keys after that would have a 3%. But what that means, based off the fact that most node operators in Lido today in the curated module are running over 6,000 validators, that would be a blended fee of 3.5%. The next is the extra effort tier. And I think this is pretty interesting. So this would basically follow an assessment from the node operator mechanisms workstream, which would then be included in the proposal for the DAO to take into account node operators that have historically spent a lot of effort in terms of geographic decentralization, using infrastructure that is less common across the network, having very distributed or diversified client setups, and then as well as Lido ecosystem involvement. So for example, node operators that hold LDO, participate in governance, bring stake to Lido, could potentially receive a 4% reward share. And finally, client teams is something that we would love to continue supporting. So there's about 6 or 7 client teams that are part of Lido today. These client teams develop execution layer, consensus layer, and validation clients for Ethereum mainnet. And generally, we would like to continue to support funding those efforts as these are very important public goods for the Ethereum ecosystem. So from my perspective, the proposed changes would really allow the Lido DAO to remain competitive and adapt to this changed market environment. The DAO has spent significant amount of revenue over the last years, strengthening the protocol by improving its decentralization and robustness. Dual governance is an incredibly novel mechanism that hasn't been seen really in the ecosystem at all, and especially considering the size of Lido is even more important. And when you consider again that Lido's gone from 37 to over 700 node operators in just 18 months, with many more planned to be onboarded in the coming months, I think that these things are important and will continue to be important. But given market share changes, given the way the environment has changed, also very important for the protocol to now invest in growth. But while we want to invest in growth and while we think this is important, it's also really important to fund initiatives that improve the decentralization of the protocol. And we think that with the changes that we're going to talk about next, we can basically have the best of both worlds. So first, we'll talk about the staking router. And so the staking router is the top level contract that supports modularity in Lido. This supports the registry of staking modules. It supports stake allocation, the distribution of protocol fees, and Lido v2 basically brought through the second version of the staking router as well as withdrawals. And that paved the way for the community staking module and simple DBT module to onboard hundreds of operators across the protocol. So with staking router v3, the main changes that are expected to come are first, the adoption of a balance-based accounting system. So this governs the deposit and withdrawal operations for the protocol, and it leads right into the next point, which is support for consolidations. So the intention is to see validators from the curated module consolidated into 2048 validators. This would cover intra-node operator consolidations, so basically allowing node operators to reduce cost and reduce the amount of validators that they are actually managing. This would be great from a network perspective, and also importantly, between modules. So as we add the second version of the curated module, which we'll talk about, validators would actually be able to be consolidated from CMV1 to CMV2. The third mechanism is called Valmart, or validator marketplace. And this would be a novel stake distribution mechanism that takes into account a bunch of different parameters that will be introduced with curated module v2. So curated module v2 is an upgraded version, an updated version of this curated module that has existed with Lido from the beginning. And this would help refine the protocol's performance, risk coverage. It would reward ecosystem participation, all while preserving decentralization and competitiveness with Ethereum's landscape. So the 4 main features we'll touch on are bonding, operator types, custom fee curves, and this new stake distribution and redistribution mechanism I mentioned. And what's really cool here is that these features are both leaning on the experience from the curated module that has been around since 2020, but also from CSM. It adopts a lot of the features that have now been tested on mainnet with CSM, with hundreds of node operators running validators there. So the first we'll talk about is node operator types. And this would basically allow the protocol to have a mechanism for categorizing node operators based on shared characteristics. This would allow for really interesting risk management and risk mitigation mechanisms, and also allow for ways to enfranchise the support for node operators like that are client teams, for example. So some of the ideas of node operator types we're considering are professional trusted node operators. These would generally be the node operators that were onboarded to CMV1. Next would be professional operators. This could potentially allow for easier onboarding of new node operators to the curated module. And these node operators might have different limits on the amount of keys. They might have different bonding requirements or performance requirements, etc. Public good operators would be very similar to the client team tier I mentioned earlier, basically allowing a way that the protocol could have client teams or open source software providers represented. And this could be represented with a higher fee share, different bonding terms, things like that. Next would be decentralization operators. And so this would be another way to incentivize node operators that are spending more resources on distributing and running distributed validator setups across geos with more expensive infrastructure, more diverse client setups, and really making sure that there is still a focus on having a best-in-class operator set in terms of decentralization. Next could be verified multi-operator DBT clusters. And so this is interesting in the context of the simple DBT module, which is expected to be wound down in 2027. Potentially, you could see consolidated validators from that module move into the curated module V2, where they would also potentially be able to take advantage of these features. And then finally is intra-operator DBT clusters. And so these are the clusters of validators that node operators are running as a single node operator, which we're starting to see in the curated module with a recent proposal. And I think this is a great example that leads into the next sort of feature here, which is sub-operators. So today in the curated module, if there's a node operator, they have one node operator entry. With curated module V2, they might have multiple. And so one of the ways to think about this is you might have your main operator type that is running very basic infrastructure, like with a single EL-CL kind of setup, I mean, multiple of them, but like fairly vanilla. But you might have subnode operator that has some portion of your keys running intra-operator DBT. And this operator type might have a different bond requirement. It might have a different fee type to recognize the need for the DBT provider fee. In other examples, maybe a node operator wants to run some portion of their infrastructure in a more challenging geography that's beneficial for network health. This could be a way to basically incentivize node operators to do that in a way that's helpful for them and for the overall health of the network. So next is bonds. So today, curated module operators do not provide any bond. However, in curated module V2, this will be a prerequisite for uploading keys and also could potentially influence stake allocation. So as the curated module will still be a permissioned module, it is expected that the bonds will be meaningfully smaller than in the permissionless modules. However, it will contribute to both reducing the protocol's overall risk profile and giving more coverage. These bond types also, as I mentioned, could be different across like different node operator types. And so there will be more information to come on this in the future. Next, and I think this is a really interesting feature that, especially when tied in with this idea of Valmart, will drive a lot of interesting conversation over the coming months. And so this is the idea that node operators within the module would potentially be able to set different levels of fees for validators at different like levels, different subsets of keys. Basically, the important point here is that running validators do not have linear costs. And especially when WaxiB is implemented and node operators are able to scale down some of their infrastructure, this looks quite different. So for example, a node operator might be saying, we're willing to run the first 2,000 keys at a 3.5% fee, but if we were able to run another 5,000 keys, we would do that at 1.5%. And then combining that with all of the other mechanisms that would be taken into account with Valmart, basically you could have a protocol that takes into account fees, performance, and importantly on performance, disincentivizing negative performance rather than centralizing the network to focus on eking out the best performance. It could take into account node operator type. So if the protocol wanted to incentivize multi-operator DBT, potentially give more weight there. If the protocol wanted to incentivize more validators in Latin America or Africa, for example, potentially could add incentivization for stake there. And two other features would be the addition of extra bond, which would provide more coverage to the protocol, as well as the ability to lock LDO and participate in Lido DAO governance. And so all of these different weights could be taken into account to have a stake distribution that, while would look different today, where it's basically flat across the curated module, could really lead to meaningful ways to both incentivize node operator decentralization, infrastructure decentralization, and change the way that the DAO currently collects fees. So in summary, that's a lot of information, I know. In Q4 2025, so just in the next couple months, it's proposed that the fee rate for curated node operators is reduced to be more in line with the market and to really start focusing investments on growth. During the next Lido Poolside call and token holder call, there will be a lot more information about this. In 2026, we're expecting to add staking router V3 if accepted by the DAO, which would support consolidations and market-driven stake allocation. And the curated module V2 will also introduce variable fee curves, bonding, node operator types. All of this would really increase the automation of the node operator set in terms of the processes that are currently undergoing within the curated module. And it would also be a way to help continue supporting infrastructure decentralization with these different kind of node operator types and fee setups, as well as supporting continued client team development. So that's it for me, and happy to take any questions.
Super. Well, thank you so much. So a couple of questions here. So the first one, what's the expected impact of basically subsidizing extra effort or client team node operators on the protocol?
So given that the fee rate in general is at 5% for all node operators today, you could be argued that there's been some level of subsidization for all node operators, given the way that staking rates have come down or staking fees have come down. So I actually think that there would be like a lot more net benefit of making these changes. I think it's very, very important that Lido continues to be like a leader of supporting the decentralization of the Ethereum validator ecosystem. I think this is one of the really, really strong points of Lido in the staking ecosystem, which is increasingly focused on APR maxi and less on decentralization. Making sure that the clients that support all of the validators on Ethereum are well funded is very, very important. And these validators and these client teams specifically add a lot of value to the ecosystem, as well as to Lido node operators. When there's issues, they're the first ones there to help troubleshoot.
Next question. So why have we to categorize node operators? What's the purpose and what does this affect?
Yeah, so node operator categorization, which is this concept of node operator types, allows basically to have different parameters for different kinds of node operators. So for example, a node operator that is running a very simple setup of just like normal kind of execution layer beacon node validator client looks quite different from a node operator that might have four nodes running in an intra-operator DVT setup, or taking that even more to an extreme, like in a 7-person DVT cluster. And so these different node operator types allow the protocol to reason about this in a way where if you have 7 people running validators and there's a DVT provider fee, potentially this cluster needs to have a slightly higher fee rate, but also that cluster might need to have or could potentially have a lower bond because there's less risk and it's providing a lot of benefits in terms of resilience and infrastructure decentralization versus a single node operator type. So I think there's a lot of different ways you can come at this, but in general, not every node operator is the same. A node operator that is running infrastructure in underrepresented geos. And so a lot of the Ethereum network validators run in North America and Western Europe. And those are places that have very mature and developed infrastructure, have a very different cost profile versus someone that's doing it in the middle of Africa, for example. And so making sure that there is a way to incentivize people to continue supporting the decentralization of the network via this categorization or node operator types is quite important.
And our next question. So how has the feedback been from operators on this change so far?
Yeah, it's a good question. I think for the most part, quite positive. There is still some things to figure out, especially around the features for staking router v3 and how stake allocation will work, because this is a very big change versus the way stake allocation has worked historically for the last 5 years or so. In terms of the fee change, which I think is probably the big open question, generally, I think node operators are the first to kind of have told us, like, we're able to take lower fees when we run large amounts of stake. And being a node operator in the curated module means that you're running a significant amount of validators. So I don't think there's been a lot of surprise that fee rates have been suggested to come down. And there has been, some fair warning as well with CSM v2, where the fees have also already come down.
And our final question, how will bonding help in validator set improvements?
So I think in this case, there's 2 things I would say. First, it is additional coverage for STE folders. And in the case of minor downtime or slashing incidents, being able to automate the penalization of bond is a very, very powerful feature versus having to do things manually, making sure that the protocol is basically protected in a more automated way. It's not a silver bullet necessarily, as bonds will only cover a certain amount, but it does lead to incremental improvement.
Perfect. Will, I lied. I'm sorry. There is one extra question. So will there be a lower limit for the commission percentage for operators?
So this is something that I think is very possible. It's still under discussion. like one of the things I probably should have mentioned in terms of stake distribution is that there will either be, so there will be a maximum amount of validators that a node operator can run, and there will either also be a minimum or a difference between how big the largest node operator and smallest node operator can be, which would be effectively a minimum. So to avoid this race to the bottom, we want to make sure that there are mechanisms in place that doesn't allow one or two node operators to capture the entire market share of Lido, for example, and make sure that there is a sustainable business model for a node operator to participate in the protocol.
Great. And yeah, I think we've completed our questions. Well, thank you so much for the presentation. It was super informative.
Thanks a lot. Appreciate it.